Gold yesterday with the stock market. I do believe Bitcoin eventually hits 100,000. I think 150, maybe 250, maybe even higher, but years down. All right, guys, we're back. Let's jump over here. I want to get into Bitcoin now. So let's talk some Bitcoin action. So basically, there's not a whole lot to update you on Bitcoin other than the fact that this resistance level that I talked about as being resistance is still working in play. And so with Bitcoin, right, we have a very clear scenario here where we came up off of this level, right, low, and still slightly a higher low, but you'd consider it almost a double bottom, and we bounced right into this level and we backed off. Now notice how Bitcoin sold yesterday with the stock market. I do believe Bitcoin eventually hits 100,000. I think 150, maybe 250, maybe even higher, but years down the line. I do think it becomes the digital gold. I really do believe that. I think the fact that BlackRock's getting involved, that you're having big institutions getting involved, that's only going to add to the validity that it is a digital gold asset. But this is the kicker. It's a maturity game. You know, when you have an asset that literally debuted 14 years ago, that is a minuscule asset compared to what is the stock market or what is gold. I mean, think about how long gold's been around. Tens of thousands of years it's been used. You're still getting the fear to kick in selling. And that's my base case or my worst case scenario, where if you're going to see Bitcoin break this level and then come down to 20,000 and break that level and potentially come down to the lows at 15,000 and change and break that level, the way that's only going to happen is if the NASDAQ starts to collapse. You know, which would be about a 50+% drop on the NASDAQ. I do think at that point, because this is still influenced as a risk asset, it's still considered risky, you will see this go much, much lower. So keep an eye on that. All right, next chart. Let's go into gold here real quick, guys. I want to talk a little bit about gold. If we look at gold, gold continues to do just fine. Dollar being up, dollar being down, whatever it is, the gold chart continues its bullish consolidation. It peaked just above this level right here. We know that that's a pivot point, and then we even go to this one here. We briefly got above it here, and we sold off, so it's still struggling. If we get through this level, you'll have a little resistance right here, but ultimately, we're headed back to the all-time highs, all right? The more uncertainty in the U.S. markets, in the U.S. economy, in the global economy, the more likely gold outperforms. All right, now is it going to outperform Bitcoin? I do think so. I do think from this point here, for the next 12 months or so, eventually Bitcoin way outperforms gold, in my opinion. But again, while Bitcoin is still a risk asset, it's likely that gold will be a more sturdy, safe haven asset. But remember, the central banks around the world are loading the boat on gold, and they are the ones with the printing presses. So if they're the ones with the printing presses, and they know what they're going to have to do in the future, which is print more money because of the debt issues in the world, in the US, in Japan, in China, whatever it may be, then guess what? If they're buying gold, it's probably an indicator we need to think about being in some gold as a longer-term investment here for the next 5-10 years, in my opinion. We have to go over the NASDAQ here, and I want to show you guys this. This is an amazing chart to behold. I've talked about this before, but I still remember when we were at these highs, and this is, by the way, this is the weekly chart of the NASDAQ Composite, weekly chart. So again, it's a long period of time going back. In fact, over here is the NASDAQ into the .com bubble back over here. When we were at this high, there were so many people saying, oh, we're going to all-time highs, everything. And I was sitting here on these game plans saying, guys, I'm not seeing this right now. I'm seeing a market that is replicating past cycles that we have to be aware of. Well, what are those past cycles? Well, look at the price action. You have an arrow here where you have this parabolic move to the upside, right? And then you have this retrace, this first collapse, which was the collapse into October of 2022. And then you have the big bounce. Now, generally, we see a lower high, and then the rollover ensues, and this is what you get, okay? And we're already starting to see that here, right? Look back at the 2000s, and I know this is small, and look at, by the way, how much Fed intervention was over here versus how much intervention was over here. And this should scare the crap out of all of us, by the way. All right, going back here, guys, big move up, right? Big move up, big correction, big bounce. Look, exactly the same pattern formation. And then look at what happened. The .com collapse right here. And so again, I don't know if this is going to happen in the next year. Maybe it takes multiple years. We'll have to see. But I do think that eventually, at the very least, I do think we're headed back down to this low here. And that's a big drop on the NASDAQ. We're talking basically 50+% down on the NASDAQ from where we are. Now, the next thing I want to show you here, guys, let's take a look. I want to show you this because it is worth taking a look. And I brought this to your attention prior as well. This is a chart of the psychology of the market. Hey, but you have the same sort of showcase: optimism, belief, thrill, euphoria. Look at the vertical move. All right. Look at the drop. And then look at complacency. This is where we are right now. Although we're starting to move out of it, we're starting to move into anxiety. I don't know if you can read that, but I'll guide you. And that is that. Does that look familiar? Does that look familiar? I think it should, right? Because again, it is identical to what we just looked at on these charts here, right here. And that's freaky, guys. Because again, one of the things I try to impress upon everyone is that the markets are just people, right? When you're trading this chart, you're trading human emotion. You have greed and fear in here. More greed up here, more fear down here. More greed here, and then starting to kind of switch over. That's what a market is. Doesn't matter if it's stocks, commodities, cryptocurrencies, real estate, it's greed and fear. And that's why charts repeat and why each and every one of you have to learn your charts. The 10-year yield, here's your 10-year yield chart real quick. The 10-year yield continues to be up. It's a little bit off of its highs from the overnight and yesterday, but this is getting very close to a shortable level. I know that sounds crazy because the Fed just came out. Rates higher for longer. But you know what? That's jargon. That's nonsense. What you need to do is focus on the charts. The Fed is going to create FOMO or FUD. The Fed is, everyone. You look at what anyone is saying in the market. CNBC, Fox Business, all of them, they're going to shake you. They want to get you to be fearful or greedy. And in this situation, you just follow the charts. And the charts are your friends because it's going to give you the highest probability of making money. Doesn't guarantee it. It just gives you a high probability.